number that breaks Minnesota home buyers isn't the purchase price. The price is just a decoy. It's what most people concentrate on, but it's not the real number. And most don't figure this out until the week before closing. By then, they've already committed to the wrong house. In this video, I'm going to break down why the monthly payment is the real number you should be looking at and not the purchase price. And stick around to the end, because I'm going to talk about the one post-closing move that is going to greatly reduce your monthly payment. A couple of years ago, I had some first-time home buyers reach out to me. They had done all their research. They decided that their price ceiling was $375,000. They did everything right. They saved up money for their down payment. They came up with their financial plan, and they had a clear path to success. 2 weeks in, we found a home that she absolutely loved. It was in a great neighborhood, strong school district, completely upgraded, move-in ready, absolutely everything that they wanted. It checked all the boxes. The only box it didn't check is the price. Now, they had thought their ceiling was $375,000. This home was listed at $390,000. And they immediately just wanted to walk away, right? They didn't want to look at it. They didn't even want to think about it. The pictures were amazing. However, they didn't even want to go see it because they didn't want to get their heart broken. I ran the math and I showed them that $15,000 in price difference was only $90 a month. And that $90 a month can easily be made up in other ways, whether it be the taxes. If the taxes on this home were much lower compared to a different home they were looking at. So if they saw a home at $375,000, but the property taxes were $2,000 more than this home at $390,000, their monthly payment would actually be about $100 more for that $375,000 house compared to this $390,000 house. Another thing that they didn't think about was if we could lower their interest rate, and there's different strategies for that, which we'll talk about a different time. But if we could get that interest rate lowered about 0.5%, that would save them that $90 a month. So while they were agonizing over this purchase price, this $15,000 a month, what they really should have been looking at is their monthly payment on the home and how we can make different strategies to lower that monthly payment. So we shifted their focus. We got them thinking about the monthly payment instead of the purchase price. We came up with a strategy to get their interest rate lowered. Plus, we realized that the property taxes were a little bit lower. So they got the home at $390,000, but they ended up paying about $150 less per month than a different home they were thinking about at $375,000. So at the end of the day, that purchase price wasn't really the deciding factor, right? It was their monthly payment. I'm Aaron Zenfanick with Titan Real Estate Group, and I help Minnesota home buyers concentrate on the real factors that help them get into the home that they love. Price and payment. They're definitely related, but they're not the same question. What purchase price controls? Purchase price is going to be the deciding factor for your down payment, how much equity you start with, the total that you owe over the life of the loan before interest. According to Experian, Minnesota median sales price is about $350,000. So 10% down, that means you have to bring about $35,000 plus closing costs. 20% down, you're at about $70,000 plus closing costs. And it's not the monthly payment that decides that number, right? It's the purchase price. It's going to determine how much money you need to save up in order to purchase this home. Another thing that the purchase price will control is how much equity you gain each year. Equity is roughly 3%. So a higher starting number is obviously going to appreciate faster than a lower starting number. A $300,000 house will appreciate about $9,000 every year. A $400,000 house will appreciate about $12,000 every year. Make sense? So that's why when we look at price, that's not going to be the deciding factor on whether or not you buy. It's more so going to affect your long-term investments and then how much you're going to need right away for that down payment. What does the monthly payment control? So the monthly payment is really going to be your deciding factor on whether or not you can afford the home. So it's going to be the determining factor of whether or not your house broke. House broke means that you're living paycheck to paycheck just to make your monthly mortgage payments. If you're living paycheck to paycheck just to cover the mortgage, you're not going on vacation, you're not going out to eat, you're not enjoying life as much, right? And you're going to be living stressed week to week. One factor that is going to directly impact your monthly payment is going to be the interest rate, obviously. Right now, interest rates are about 6.75%. That means for about every $5,000 in purchase price, it's going to be about $30 a month. Another factor that's going to directly affect your monthly payment is going to be your insurance. Now, depending on your track record and depending on what kind of house it is, the age of the home, the age of the roof, the age of the furnace, that's going to directly affect your monthly payment. And it can be as much as $1,200 a year difference. That's $100 a month. So when we're comparing homes, You don't want to look just the price point. You want to look at what your insurance is going to cost, right? An older home with older appliances, older mechanics, older roof is going to cost you more in insurance than a new home is. So while that new home may be priced a little bit higher, it may cost less monthly than that older home with more insurance. Another factor that we talked about briefly already is the property taxes. Property taxes are really big factor. Location, location, location. Property taxes in this neighborhood might be $2,000 more than property taxes in that neighborhood. And again, that's going to be hundreds of dollars a month that you might not think about. So this brand new build that's, a few suburbs over from downtown may be $50,000 more, but if the property taxes are $2,000 less, insurance is $1,000 less, then it might be the same monthly payment as this $50,000 cheaper home that's closer to the cities. Something you got to think about, right? So how do these two numbers interact? The purchase price and the monthly payment, right? So one thing that's going to affect how purchase price affects your monthly payment is going to be what's called PMI. It's the bank's insurance, so to speak. So if you put less than 20% down on a home, the bank is going to charge you a monthly fee until you hit that 20% in equity. And that's because if you put less money down, you're more likely to default on the loan. That extra monthly payment on the mortgage is going to help cover those costs to recoup their funds if they need to foreclose on you. Once you hit 20% in equity, you can then remove your PMI. And PMI is a percentage of what you owe on the home. It's anywhere usually from $100 a month to about $300 to $400 a month, depending on how much you actually put down. So that's another factor you need to think about is if you're going to be close to getting to that 20% equity after a year or two, if it drops off the monthly payment about $200 a month, can you make that monthly payment work for a year or two? And then once you get your equity, it'll drop off and lower your monthly payment by about $200, right? Also, don't forget that at 6.75, every $5,000 in purchase price, it's going to affect your monthly payment by about $30. A lot of people don't realize that, and they just see a larger purchase price and get freaked out. But $15,000 in purchase price is only $90 a month, but it could be the difference between a home that you love and a home that you can just tolerate. And $90 a month nowadays, it's going out to eat once, right? So you just go out to eat once less a month. Now you can get a home that you actually love and not just settle for a home that you're okay with. So again, you really just want to make sure that you're looking at the real numbers, which is the monthly payment and not just that purchase price. Now let's talk a little bit about rate sensitivity. We mentioned earlier that, right now at 6.75, it's about $30 a month. Obviously, if you go down in interest rate, you're going to have a smaller gap in that number, right? So a $300,000 home at 6.75 might be the same cost as a $350,000 home at 6. Waiting for that interest rate to go down to 6, but waiting for the interest rates to go down that 0.75% may not be the way to go. Because even though it's going to be a lower monthly payment in theory at that $300,000 purchase price, if that interest rate goes down to 6%, that home is no longer going to cost $300,000. It's going to go up to about $350,000. So even though you're going to save about $90 a month in theory from that $300,000 because the interest rate dropped 0.75%, purchase price went up over 10%, which is again about $25 to $30 a month for every 5. So it actually went up $300 a month. You saved $100, but it went up $300. So you actually netting a $200 more by waiting for that right moment, right? And not only are you going to have the purchase price go up if the interest rates go down, because again, everybody's waiting for the interest rates to go down, you're going to miss out on equity and appreciation. Buying a home now, instead of waiting 5 years for the interest rate to drop, you're going to earn a lot of equity and a lot of appreciation in those 5 years. And by the time that 5 years hits, you're probably going to be ready for an upgrade home now. And you're gonna have enough equity in that home to do that. So I always say, talk about get in the home if you can afford the monthly payment. Waiting for the right moment. The right moment's never going to come. Get in there now, get that monthly payment to a point where you can afford it, save up your equity. That's going to give you the buying power to move up in the near future. Another thing to think about is if you're renting and you have roommates, you can get your roommates to rent out the homes in your new home. And now you're going to be paying less than you were paying when you were renting, and your friends are going to be paying your equity instead of you and your friends paying someone else's equity. So all things to consider that are directly correlated to the monthly payment. All right, let's talk about that one move that I hinted at that can definitely save you on monthly payments and get your overall payment lowered. One thing that people don't think about is making an extra mortgage payment each year. If your mortgage is $2,400 a month, if you can spend $2,600 a month, that's an extra $2,400 each year, which is one monthly mortgage payment. That is going to almost cut your loan life in half, which is going to save you tens of thousands, if not hundreds of thousands of dollars in interest. Most people think that their monthly payment is a fixed number. And while that monthly payment won't go down, you can certainly make it go up, pay a little bit more, and then over the life of the loan, save all that interest. Not only is it going to help you lower the overall interest the life of the loan, it's also going to help you reach that 20% equity faster if you didn't have 20% down, which will allow you to drop off that PMI, which we discussed was about $100 to $400 month. So it's going to lower your monthly payment drastically by getting rid of that PMI. And you can also use your equity as well, the appreciation in the home, for that PMI calculation. So you're making that extra monthly payment is going to make you reach that 20% equity very fast, and it's going to lower your monthly payment overall very quickly. Here in Minnesota, the homes are appreciating even higher than at 3%. So you're definitely going to get all that equity much quicker. It's going to give you the opportunity to move up to your next home. Just getting into the home now is extremely important. Again, as long as you can look at that monthly payment and make that work for you. And that is actually how I approach my buyers, is we reverse engineer what the purchase price will be by figuring out what their monthly payment they're comfortable with. You go in there, you type in all the numbers, you figure out what their monthly payment is. And that's something that we do on our very first consultation. For my buyer consultations, we meet together. We're going to help you figure out that exact number that you're comfortable with. And we'll get you into that purchase price that works for you. It's usually a lot less than what you're pre-approved for. So a lot of people say, oh, I'm pre-approved for $500,000, but they don't look at the monthly payment, and they could end up buying a home for $500,000 and then being house broke. So our strategy at Titan Real Estate Group, we want to make sure that you're not house broke. You have a monthly payment that you can afford, and you get into a home that you love. Got to take a look at all the factors: insurance, property taxes, interest rate. See if we can't get that interest rate lower somehow. And just making sure that you take a look at the real math and not just that big purchase price number. All right, guys, that's all I have for today. If you have any questions, drop them in the comments below. I look at every single one of them. If you've done this in the past and you came to realize that, if your monthly payment is more than you could afford, or it's less than you actually thought it was going to be, and you wish you were in the new home, leave a comment and tell us your story about that. Or if you're looking to get into your first home or make a move up home and you want to ask some questions about how to calculate that monthly payment, drop a comment as well. I'll make sure to get to them. We answer all the comments, and even better yet, reach out to me directly. I'll help get, we'll get a buyer consult going. We'll go over all those numbers together. And again, we'll make sure that you're in a home that you not only love, but that you can afford. Thanks, guys. Titan Real Estate Group, treating you the way that we would want to be treated.